leave it to the American to be singing the praises of London.
We've grown from being 230 million pound market cap company to 4.7 billion.
The numbers are the starting point. Then you drill into, what is the story? Where's the growth coming from? Why does it continue? What's the runway for growth? All of those. But literally, the door opens on the numbers.
Is if you're going to pick out 5 of the top fintech stocks in the world, I can make a pretty damn good argument that 2 of them are based in Europe.
I would say for non-UK companies, one of the biggest thing is the stamp of approval and the governance standards that London provides, and it goes a long way in the home markets.
Morning, everybody, and thanks for joining this next panel. So my name's Nick Prowting. I focus on advising UK-listed tech and fintech companies at Investec. Investec's probably a name familiar to some people in here, given some of the African roots. But Investec's a global investment bank that was started in South Africa, got a huge London presence and offices around the world. And our topic for conversation today is, what are public market investors looking for in the fintech space? And given we're here in London at the LSE, naturally there's going to be a London flavour to that discussion. But that's not without some very strong justification, in my view. There is a lot of misinformation about London, and we're very good in this country at talking ourselves down and our capital markets down. And that's not sort of to ignore some of the things that were discussed in Russ's session earlier. But London does remain one of the world's leading international capital markets. All sorts of numbers that back that up, but I'm not going to go through those now. But in particular, it offers quite a distinctive combination. So there's deep pools of capital, meaningful secondary liquidity still, a sophisticated global investor base, and that's covering developed market investors, emerging market investors, and sector-specific funds as well. And importantly, a market that has a real understanding of financial service models and also tech companies. So when thinking about companies listing, and I understand that some of the companies in here may consider that as part of their journey in the future, the question is not really where can someone list. I mean, companies can list in all sorts of markets around the world. But where are they most likely to be understood, supported, and valued appropriately over time? And we're fortunate to have some great perspectives here today. And we've got the lived experience of a London-listed company. We've got a perspective of a long-term investor, and the valuation and positioning lens of the sell side. So just to introduce our speakers today, we've got Levan, who is the Deputy CEO of London-listed Lion Finance Group. Fantastic landmark recently, is now FTSE 100 company. The first company from your region to be able to do that. It's a fantastic story there. Georgina is a Managing Director and Portfolio Manager at JP Morgan. She's based here in London. Fantastic track record of investing. Really looking forward to her perspectives. And Justin, down the end there, we've got Justin, who's the lead payments and fintech analyst in EMEA at UBS. So he's got deep sector knowledge, covers the likes of Adyen, Wise, Nexi, to name a few. So the first thing we're going to talk about is what kind of fintech companies fit a listing. So Levan, it might be apt if we start with you. Lion Finance chose to list in London. It's been listed in London for a long time and remains a very successful story. What are the decisive factors that meant that Lion Finance, or Bank of Georgia at the time, floated? And looking back, have those played out as the company expected?
Yeah, so we've listed 20 years ago in forms of GDRs, and then in 2012 we've moved to the premium listing. So that story probably has like 3 bullet points. The first one is proximity to sophisticated investor base. Second, obviously, being access to deep capital markets and liquidity. And last but not least, like London being the gold standard of governance standards, I would say, and that helped us enormously in terms of like trust with both investors and as well as in our home markets. And we've grown from being 230 million pound market cap company to 4.7 billion. So within that journey, we've attracted diverse group of investors, and many of them are long-term shareholders, long-term backers, and we appreciate them enormously, such as Georgina here. Yeah, obviously the whole journey has been a fantastic ride, and the milestone we've reached, as you mentioned a couple of months back, is us being part of FTSE 100. So I think everything what we hoped for is happening, and we are extremely happy to be here.
Thanks, Levan. Yeah, great to hear that it's sort of empowered your journey to here, being a London-listed company. Georgina, as an investor in line finance, but when you hear that, does that resonate with how public market investors, in your view, think about companies that want to become public, companies that are public, fintechs?
Yes, good morning, everyone. So first of all, I'm an extremely happy investor, as you can understand from what you've just heard there. Yes, absolutely. At the start, I obviously choose to invest. I make my own decisions. I buy for my funds. But as you can imagine, for any fund manager, there's sort of oversight and everything. And at the start, there were questions about quite a few of my holdings. And one was, okay, Georgia, Bank of Georgia. And it's so interesting. Just I said what we're invested in at the time. Small position, new stock. We didn't know that well. Company that unproven to us in our world. At the time, I looked at the metrics. That's what I did. It's a bank. I don't get many small banks in my area of the market in the UK, and I looked at the metrics and I was like, this looks like a very compelling story. We'll wait and see if it's proven. And but the income I'm getting is like, well, what do you know about Georgia? And I'm like, well, what do I know about what do I know about Argentina and the mines that I'm invested in there? What a silly question. So of course I went away and did my research on it, but really, and it was interesting that sort of incoming does still occur, and I find it extraordinary because my focus in the markets is, so I'm UK only, and I'm sort of circa 5 billion down to about 100 million, so large gamut, and circa 50% of my universe, my opportunity set, so 500 plus companies, are non-UK in terms of what they do. They have to be quoted here, but they're not. So so it's so interesting. I sort of got those kind of questions. You just say, wrong question.
So are there particular characteristics that make a potential investment for you, or an IPO story more compelling from your perspective?
Yes, absolutely. Well, as you heard, the very first thing that I ever do is actually look at the numbers. I want to see the past history. I want to see the metrics. Then, of course, we have the conversation with brokers about valuation. And for me, obviously, I'm just one fund manager here, and others will definitely have different views on this. But for me, I don't invest in. It's not that I don't invest in early stage. I don't invest in unprofitable companies. There's others who do that, and they do it very well, on quoted or unquoted. But for me, I want to have broken through that threshold. So I kind of start with that, and it really, the numbers are the starting point. Then you drill into what is the story, where's the growth coming from, why does it continue, what's the runway for growth, all of those. But literally, the door opens on the numbers.
That's helpful. Thanks, Georgina. And Justin, in your view as an equity research analyst, when you come to write on a fintech, I'm sure many of the points that have been discussed here sort of resonate with you. But are there any that stand out for you? You look for when you're presenting a story or thinking about how you're going to tell a story. What are the ones that stand out?
Yeah, thank you, and really good to be here. Leave it to the American to be singing the praises of London, but but no, I think, and we're probably going to come on to a little bit more around the valuation side of things, and we're going to talk a little bit maybe about some of the stuff around liquidity, but my general view is that fundamentals drive valuation and stock price. And so in a way, I don't think that in reality is predicated on listing venue. In fact, I would almost posit the opposite, which is some of these higher growth assets, perhaps like these guys or others in the space, are more scarce relative to other assets in the market, and actually that could command a valuation premium. And we've seen that on average across whether it's tech companies that list in Europe, whether it's fintech companies, whether it's financial companies that list in Europe. So I would almost argue the antithesis. But I mean, it's the normal things that you look for in any business. It's long-term moats. I think that's one of the biggest questions that has come up in the fintech space as of recently. Like, you have seen a pretty meaningful pullback in multiples over the last 2 or 3 years. And I think the question we ask across all of the different sub-vectors of fintech is, do you have a moat? I mean, we just heard on the last chat talking about the way that you can plug into back-end systems fairly easily, and you're making a discussion between perhaps cost and speed to market. And so I think that's something that you have to consider for longer-term multiple sustainment.
So for that, and you touched on an important point there, I think, about scarcity. And when we look at London, potentially in particular, some of the financial profiles of probably some of the businesses in here would have serious scarcity value on a market such as London.
Yeah, totally. I mean, again, it's in the fintech space in particular, like the way I've phrased it before to a portfolio manager is, if you're going to pick out 5 of the top fintech stocks in the world, I can make a pretty damn good argument that 2 of them are based in Europe, and one of them, like Wise, I would perhaps put on that list in my view. So, and Adyen would be the other one. So you are building great companies here, and again, good companies should command a premium valuation. And particularly if there's less of them in that region, it will just have to make its way into every portfolio. So I think you can make, again, that argument to the opposite.
Thanks, Justin. Next theme that we sort of moves on to quite nicely is just around public market investors and the environment understanding of fintech. And I know, Georgina, I'll come to you first because I know this is something we've discussed before and a source of great frustration to you, actually, that sort of notion. But love to hear your perspectives on just sort of how you think about fintech as a sector to invest in as a London-listed investor.
Absolutely. Well, the notion we were discussing was that UK, London, what do they know about tech? Really, that was kind of, and you know, quite sensible grown-up people have been known to say this, and you read about it in the papers. And personally, I find that incredibly insulting. We've got pretty bright investors in London. London itself is it not the global capital of fintech? It's definitely one of 2. Guess what? It's not just up in King's Cross. Here in the city, we also know about fintech. So really, I start with that. But as you heard, I mean, I look at, for me, I like to look at IPOs. I like fresh sort of fresh ideas, fresh companies coming to the market. We do spend quite a lot of time on it when there are lots of them. And I mean, you heard, what I was saying, about Bank of Georgia. Where you start really though is you look at the metrics and then you work out what's moving behind it. And obviously, just in terms of I keep coming back to numbers because that is what I do. Fintech by its nature, extremely profitable, great metrics, always a good starting point.
Yeah, and one thing I would sort of follow up on there actually, which I'm sure you agree with, is just the London-listed investors' willingness actually to, particularly where the fundamentals and the numbers are compelling, to actually look at something that they might not experience here in London. So an example is Boku, which I know you're invested in. That's a story, local payment methods in all sorts of emerging markets around the world. Not seen here in London. We don't really touch and feel that here in London, but such a compelling story, such compelling fundamentals, that actually the market cannot ignore stories like that.
No, absolutely, and like I said, I keep harking back to what I will call Bank of Georgia. You get excited by the numbers, by the story, and then you go away and do your research. So I do research on Georgia. I do research on, it, as you say. I mean, I'm so old-fashioned. I actually still have a checkbook. So God help me. I know I'm the only person in this room, and I do it once a year. I write a check. But but exactly that. If the story, and I keep saying this, the numbers are so exciting, you go away and you do the work.
Yeah. And Levan, has that been your experience in practice? So your business spans banking, lending, fintech. do you feel sort of well understood by the market? Has that taken time for the story to be well understood? And what's taken the most sort of explaining over the years?
Yeah, I think to echo Georgina and Justin here, like the fundamentals. And speaking of fundamentals, our return on average equity is like 29%, which is the highest in FTSE banks, and our cost to income ratio is 35.5%. Like the fundamentals, that you cannot really ignore them. So it really comes down to two things that you would love to communicate to your investors: your strategy, and obviously the numbers you're delivering every quarter. And if they have belief in the strategy and your execution is disciplined and consistent, then at the end of the day, obviously if the fundamentals are there and if the growth story is believable by investors, obviously it takes time, and the time is the reflection of your consistency of results, and obviously more the time goes by and more you see the results, more conviction you have in the strategy.
Absolutely, thank you. Justin, and talking about fundamentals, you touched on earlier valuation earlier. So, when you're valuing and looking at fintech businesses, what are the metrics that really matter most to public market investors in your view?
Yeah, totally. And I think also this will maybe touch on the conversation we were just having around, say, like London versus the US, right? I think what that question's actually asking is, do European investors or London-based investors have a different set of KPIs or mechanisms to value a company, or do they look at multiples in a different way than US investors do? Am I willing to underwrite an unprofitable company versus a profitable company, as Georgina just said? And I don't know, maybe it's because Americans are dreamers, but from my seat, I would say there are different frameworks used. You might, if you're a US investor, you might say, if you're looking at an unprofitable company, go out 5-10 years, put some sort of EPS multiple on the company when it is profitable and discount that back to current day to arrive at your valuation. Whereas maybe in Europe you're thinking this is more of a DCF oriented approach. Maybe this is more of a, I'm looking at today's profitability, to what Georgina was saying. And that doesn't mean that I don't think European investors can't get behind an unprofitable story, but I do think there is a bit of a dichotomy, and that's probably what the question's getting at. How do we value companies? I think we use a host of everything. We tend to use a multiples-driven approach. I think in the fintech space, you see quite a broad dichotomy in growth between different stories. So you have some really mature stories where you could be doing earnings growth of high single digit, low double digit. You have fast growth stories who could be doing 2 or 3 times that. And so we normalize that on a multiple to growth basis. So what we would call like a PEG ratio, multiple of earnings growth, or EBITDA growth, to normalize for that dynamic. And then we think about applying a premium or a discount based on, what we believe their ability to grow at that pace for a longer period of time is going forward. DCF, of course, we use it to triangulate numbers, and look at other comparable companies in the space as well to triangulate kind of all of those simultaneously.
Perhaps just a follow-up to that, maybe one for Georgina actually. So you've obviously spent a lot of time with sort of founders of businesses and leaders of businesses that have floated over the years. What's sort of the most often misread thing by founders and owners, etc., that the public markets will focus on?
Okay. Well, I think. No, sorry, I don't think. I absolutely know. Absolutely, first and foremost, deliver on your numbers. I mean, that is just it. So you heard it said earlier, about how did line finance get from 200 million into the FTSE 100? Long time. It doesn't happen quickly. Consistency. So it is all about showing that at minimum you're hitting your numbers. And I think for private companies, it's quite a shock for some of them, because really truly in real life, what do you care if the contract came a month late and therefore doesn't fall into this financial year, it falls into the next one? Well, guess what? the stock market cares, the share prices will move, that kind of stuff. So I'm afraid, that would be it.
Yeah. It's discipline around managing market expectations.
Absolutely.
It's a skill.
Absolutely. It is a skill.
Levan, for you as a listed company in London, just thinking about depth of capital and liquidity available, has the market sort of delivered what you hoped in terms of shareholder support over time? Sounds like it probably has. But one of the arguments often made for listing is it's not just access to capital at IPO, but it's the sort of secondary market afterwards and liquidity in your shares. How have you seen that play out? And I'm thinking really towards your index inclusion over time has probably been helpful, but also just in terms of the different investors that have come on and off the register.
Yeah, so the capital has really helped us to double down and accelerate on our strategy. So what we operate 2 universal banks in Georgia and Armenia, so we are built as a fintech on the front and as a traditional bank in our back office. So we do business across all of the micro segments you can imagine, and to be faster and really deliver digital value and digital capabilities that being extremely customer centric, the support from investors and the liquidity has been crucial in that. So we believe it really helped us to accelerate on our strategy.
Thanks, Levan. And Georgina, just sort of building on that from your perspective, what makes London public markets attractive for you to invest in?
Okay, well, in one sense, I can't answer that because it's the only market that I invest in. That is, my funds are absolutely UK focused.
You're told.
But believe you me, I wouldn't be here. But having said that, as I think I already said, so my universe, north of 1,000 stocks. Only circa 50% actually make their money in this country. So, like I said, there is a very broad spread. I'm not sure, but I'm going to answer a slightly different question to the one you asked me. So, very, very clearly, there's been, again, a lot of noise in our press, rather overstated, but, we've definitely seen companies leaving the London Stock Exchange and moving to the US. Quite a few of them have gone quite wrong. We won't worry about those. But very clearly, from where I sit, but obviously speaking to my US colleagues at JP Morgan, it's just so obvious. Really, in the US, you need to be of a size that is just not relevant for so many of the companies that I'm invested in at the moment. And it really is true. But I'll just give you, I was thinking about this one nice, sad example, because we have lost them, mainly lost the main listing to the US fairly recently. It's a company called Ashtead. So very much not fintech, although absolutely, they've spent the money and done the time on the tech, but basically it's a plant hire company. It was in the FTSE 100. It's a company that I also known for kind of 20 years. I bought it when it was a small cap, again, to 200 million market cap, whatever it is. It's now, north of 10 billion, at least. Even all the time it was quoted in the UK and headquartered in the UK, senior management, chief exec was, and most of the board were British, kind of irrelevant, but they lived here. Almost 90% of its business was in the US. So that's where, in terms of analysing the company and what you're investing in, that really was the story. So that move, to be honest, I was kind of a little bit surprised that it took them so long. That one, you completely understand it. But really, truly, the point I'm emphasising here is, if you're much smaller than that, you just won't figure in the US, whereas, there's a lot of people like me, as you said, I go all the way down to circa 100 million. You're going to have a lot more eyes on you. You'll be a lot more visible in the UK market.
Thanks, Georgina. And Justin, do you have a take on just at what point does scale, to Georgina's point, does scale really start to matter for a listed company, and in particular potentially in London? I'm just thinking from from scale generally, but also free float and liquidity perspective?
Yeah, I think there's a few different aspects to that. I guess point number one is that, I mean, there are definitely certain stocks listed on the LSE where we've heard the argument that, you know, funds of a certain size have trouble getting in and out of positions. So, like, look, does that happen? For sure. I think it depends on the question you're trying to answer as a company. Are you trying to provide liquidity to shareholders or existing shareholders or founders? Like, how much does liquidity obviously matters to them to be able to get in and out of positions, but does the level of liquidity matter to you as founders, or does it matter to people that are, you know, kind of advising you? I guess is one way I'd phrase it. I think another important consideration with the kind of listing venue thing, again, I think we get caught up in the valuation discussion. I think we get caught up in the press about advertising these things. And one really important aspect of this is, as an investor, do I understand the story? So if I'm a European or a UK listed company, am I providing a product that appeals only to a certain do I understand the Monzo brand? Do I understand the Klarna brand? And do I understand that story? Because if I don't, how likely are investors in another geography to understand that story? So I think understanding the product market fit, particularly in financial services, where that's something that maybe everybody in this room might have a Monzo account. If you were to go to San Francisco, you probably count them on one hand. So, and I guess not anymore, given they've just pulled out of the U.S. But that's just an illustrative example. Now, I'll leave it to the friends here at the LSE to provide the actual liquidity statistics, but I mean, is there enough liquidity here for, you know, most developed markets investors to build a position? I would say I hear it from time to time that it's a problem, but definitely you still can build a position here. And is there a certain scale that maybe says I need to go to the US versus Europe? I mean, I would obviously, if we're talking companies like the size Georgina was mentioning, I think there is a locality to it. I wouldn't, that's not even a London question, right? That maybe is even a local Brazilian stock market question or European stock market question or Asia stock market question. It's just like, of a certain size, the people that locally understand and envelop that product and use it on a day-to-day basis, they're going to understand it the most. So again, I think we're sometimes talking apples and oranges here, but in general, I think all those points stand.
Thanks very much. And I'm just going to move on to a point that Levan mentioned earlier and touched on in relation to just expectations of a company that's listed in London around governance and life as a potentially an international issuer. Probably firstly go to Georgina. There's often a debate around governance and reporting requirements for listed companies, sometimes directed as a criticism of that environment. But from your standpoint as an investor, do you see those as a deterrent or actually as a positive creation of confidence?
I definitely veer towards the latter, and also, I mean, not just today, but the number of companies, you know, as I said, you know, I like IPOs. I've invested in a lot over the years, and when I meet the company the next time, you know, 3-6 months later, you know, one of the questions I always ask is, you know, is me to them saying, you know, how are you actually finding the quoted markets, and you know what surprised you? I mean, and the feedback I get is almost universal that for them it's really struck a chord with, for example, their customers. You know, it is a stamp of recognition, and I think, you know, that says it all. Yes, you know, some of them might be a bit prescriptive, a bit too much, and I think, you know, various changes are being made on that front. But in general, it is a massive stamp of approval.
Yeah, absolutely. And actually, one for Levan and Georgina, basically building on that slightly, just something that people may be interested in, just importance of management access. So investors, direct dialogue between investors and management, and also presence in London. Is that how have you found that, Levan, and Georgina, from your perspective, how important is it?
Probably it's the expectation is for the investors if they expect us to be here, but we are extremely focused on our home markets. Our headquarters are there, and Obviously, we have an office in London, and our investor relations team is partially here. With that, and obviously we have the quarterly investor calls and roadshows, etc., etc. So I think it pretty much covers it. And the investor day that we have coming up this year as well, we won't be in London. We will be in Georgia. But our newer investors will see Georgia and our scale there, and our scale in Armenia as well.
And Georgina, from your perspective?
No, absolutely. You've heard that. That would be sort of classic, customary answer. You know, we do like mainly to see management in person. So once, twice a year on the road shows, and beyond that, you know, of course you're based in Georgia. You know, we'd be sort of horrified if it wasn't the case. So it really does work like that. But also as you know, prior to COVID, obviously every single meeting was in person. Then every single meeting was on Zoom. And for me, there is a place for both. I can say that because, you know, a lot of my companies I've been invested, as you heard, a long time, so I know management. And once you know people, as we all know, it's a lot easier to have a Zoom conversation, and you're not going to miss things. But especially for IPOs, it absolutely has to be in person. And as I say, really, you still get more out of face-to-face meetings. We all know that. So there's a bit of space for both. But yeah, beyond that, you know, let's say, you know, absolutely be based.
There's sometimes misconceptions out there that, you know, I hear it all the time. Or don't I need to be in London to be a London-listed company? Don't I need to be a UK company, etc.? The answer is very clearly, as you heard from Georgina, there, no. Just conscious of time, we actually don't have a timer, but I think we're coming up to broadly where we finish. But so I'll finish just with a quick fire round, a question for each of you. In each of your view, what would be the single strongest argument for listing or choosing London as a listing venue? Perhaps I'll start with Georgina.
I'm going to say this. A great investor base.
Support.
Not objective at all.
Fair enough. Levan.
I agree. So, no, yeah, as I mentioned, like there are a couple of times that question has popped up today, and I would say for non-UK companies, one of the biggest thing is the stamp of approval and the governance standards that London provides, and it goes a long way in the home markets for the companies that are not operating in UK.
Excellent. Yeah, I think a really important point for people to hear. And Justin, your thoughts?
Yeah, no, I mean, I would kind of echo that in terms of the investor sophistication and the amount of capital that is here.
Yeah.
Right, there's a lot of it. So if you're looking for well, maybe there's some reason why people, you know, aren't listening or whatever, it's tied to the investor base, it's tied to the amount of capital, I would say that in my experience, that's certainly not the driver. So I would say this is a stock market that tends to have a pretty strong presence on the world stage. As I've covered companies listed in, you know, Dubai, a lot of companies listed across Europe as well, and some of them have listed on the LSE, of course. And so, like, in general, I guess I'll make a side point, which is, you know, I probably can't be advising startups anyway due to rules we have in the banking industry. But what I would say in general, I think you probably caught this from what I was talking about, is I don't really think listing venue drives valuation. I think fundamentals do. So if you have a good fundamental story, London, amongst other venues, but of course London is a place that you should consider listing.
Thanks, Justin. And with that, I think we'll just wrap up. We've had some fantastic insights there from all three of you, so thank you very much. But I think the message really is for high growth international fintechs with scale and ambition, and really a credible public market story to the points that we discussed there. London really does remain a compelling listing venue for companies.